Hello, everyone, and welcome to our training today. So today we're going to dive in and we're going to talk about business credit benefits. We're going to talk about a lot of things that building a business credit profile, building your corporate credit can do for your business that you probably don't even realize can actually do for your business. So today we're going to decode, we're going to take a look, and by the end of this training, you're going to know the basic steps to build business credit, but most importantly, you're going to know the powerful benefits that business credit provides you and all kinds of things that will happen in the positive for your business as you start to establish your corporate credit profile. So for those that don't know me, my name's Ty Crandall. I'm the author of Business Credit Decoded. I also happen to oversee the largest coaching operation of business credit partners in the country. So I know a lot about what I'm going to be teaching you today. If you need help along the way with building your business credit, I'm going to put a free guide and a free checklist at the bottom of my slides. You can grab our checklist at creditsuite.com/live-checklist. If you like what I'm saying along the way, do me a favor. Give me a like, give me a love, give me a share. That way other people can see this content as well. So a lot of cool stuff to dive into. Again, if you need help along the way, grab our free guide, and we'll also have our number for a free business credit consultation that you're able to receive as well, right? So a lot of stuff is happening right now. Lots changing in the world where it's more difficult now to get financing than it's been. A lot of the financing in the commercial space is based on you having consistent revenue, et cetera. Since that's not the case, and since banks have really tightened up, it's harder to get money now than it's been historically. One of the reasons I really want to talk about business credit, because with business credit, it's still free flowing. This is still credit you can get right now to get through any economy, especially in a recession, because when other banks are tightening up, the credit markets still are pretty loose. There's still a lot of money is still flowing here. You still have the ability to get very high limit accounts in this world, which we'll talk about in a little bit, how high you can actually get these limits to be. So remember, today we're talking about business credit that's linked to your EIN. This is not linked to your personal social. So you really have two kinds of credit as an entrepreneur. You actually have three. You have bank credit, which is your internal credit scoring with the banking system. It's your ability to get money from big banks. We'll talk about that another day. Then you also have your consumer credit. Obviously, you're familiar with that. Then you have a third type of credit, which is called business or corporate credit. And when we talk about business credit or corporate credit, we're talking about credit that's basically a profile that's linked to your EIN, much like your consumer credits linked to your social. You have a credit profile that when somebody pulls your social, they can see with this, you're actually pulling your EIN and seeing your credit profile based on your business's ability to pay its bills. So this is separating truly your consumer and your commercial credit. It separates your liability. It creates a lot of separation to help your business stand on its own. I kind of describe business credit as a way for your business to fund itself. And it's the only way for your business to fund itself. I talk to a lot of people that try to get money without a personal guarantee, and they ask me all these crazy questions of how to do it. There's only one way to be able to get money without a personal guarantee: build a corporate credit profile. Business credit helps you do so because when you build a business credit profile, your business can stand on its own. It can fund itself. It can go out and start applying, or you can still go out in the business name and start applying and getting high limit credit cards, cash credit, Visa card, Mastercards, auto financing, all of this without a personal guarantee, without a personal credit check. But the key is you have to be able to separate the consumer and the commercial credit profile for any of this to work. And that's what we're going to be talking about today, because the scores, the way that the credit systems work, diverge significantly. I mean, they are very different from each other. And Daniel coming in from Facebook, what's up? Thanks for tuning in. Steve and Willie, all from Facebook so far this morning. So thanks for tuning in, everybody. We are live on Periscope, Facebook, and YouTube right now. So I appreciate everybody tuning in. So again, we're talking about credit in the business's name. Here's the big difference. It's based on your business's ability to pay its bills, not you personally. So when I talk about getting all kinds of crazy credit without a credit check, you should be skeptical. Anybody would be skeptical when somebody says you can get all this money without a credit check. But it's possible, because when we build a corporate credit profile for your business EIN, then what happens is your business EIN's credit profile depicts your business's risk of paying its bills late. And so once you've established a corporate credit profile, then what happens is a lender, a credit issuer, can start looking at how your business pays its bills. And when your business has enough proof of paying bills timely or on time, then less times your consumer credit's needed. They don't care about you as much when they have all of this history for your business where they can see how your business pays its bills. So let's think about Dell, right? We know Michael Dell is not personally guaranteeing anything for Dell, right? When they go out and get credit lines. So how can Dell get credit lines? Well, Dell gets credit lines on its own because if you pull Dell's credit report, you see literally hundreds of trade lines on their credit report. They have hundreds of different accounts they've had that they've paid as agreed. So lenders and credit issuers pull that, see that Dell can stand on its own, and it doesn't need a guarantor as a result. Any business can do the same thing, following the same series of steps that Walmart, Dell, Amazon, they all followed the same steps to be able to get here. It's just this has kind of been hidden for larger companies, and small businesses haven't really understood the process of how to do this. That's what we're going to decode today. So remember, we're talking about credit for your EIN, not linked to your social. We're talking about credit that's based on your business's ability to pay, not your ability to pay personally for the credit. It's why we don't need your personal credit to get this. So since the business qualifies for the credit, when you do this the right way, we're getting around that personal credit check. We're going to talk about that a little bit later. And you're not personally liable for what you're actually accruing here or accumulating here in corporate credit cards. We'll talk about that a little bit later as well. So let's dive into a lot of benefits. And Jay Charlie says, I'm on YouTube. I can see where you're all from. So thanks for coming in. And Preacher says, glad to be here from YouTube as well. So thanks everybody for tuning in. So first of all, Inc., Score, SBA, Entrepreneur, they all say the same thing. The reason you want to build corporate credit is benefit number one. You need to create a veil or some layer of protection between your business and your personal assets. You've got to create a separation here, okay? If you don't create this barrier, then what happens is if you ever default on business debts, then they come after your personal assets. So let me give you a real world story of why I'm here right now today talking to you about this. I owned a mortgage company in the mortgage crisis in 2008. Remember that? It was nasty, especially if you were a mortgage company. Okay, so basically I started to default on my business debts. And inevitably what happened was multiple problems. First of all, my business debts reported on my personal credit report. So the minute I went late on my revolving business credit cards, my consumer credit limits all got cut to what I owed, tanking my consumer credit scores. So my ability to use my personal credit cards, my personal credit to recover from the mess was gone immediately, all because I started to default on my business debts. Even worse, when I defaulted on the business debt, one in particular with Bank of America, what they did was come in and literally clean out every dollar in my personal bank account. Business credit line defaulted. They came in overnight. You go in, there's thousands of dollars in your account. You go in the next day, there's thousands negative. Why? Because they took the cash that was there and all that cash had checks written against it. It was a complete nightmare. I bounced all of these checks. It was it was the worst financial experience I've ever had in my life. Both of those things happened. My credit limits got destroyed and all my cash was taken because I didn't do this, because there was no separation. I guaranteed those bills. I guaranteed that revolving credit. I had the credit reporting on my consumer credit report. So now that we're in a world of COVID-19, we all see what can happen like that. Overnight as an entrepreneur, it shows us how little control we really have. Anything can come out of left field that we never saw coming and shut down our business, whether it be permanently or temporarily. And so we have to create this barrier between our personal and our business assets. So if we ever default on a business debt, they can come after business assets, but they can't touch our bank accounts. They can't touch our stocks. They can't touch our bonds. They can't come after our house. They can't come after our cars, okay? So that's why this is important, because what happens is they can come after business debts when you create the separation. They can't come after your consumer debts. So I talked about this on stage once, and a lady came to me in tears afterwards and said, look, I'm ashamed, but I used to work for a collection company and everything you said is spot on. What we did was looked at wherever the money was. So if the money was with you personally, we went after you personally. If the money was in your business, we went after your business. But in more times than not, since the business was defaulting on the debt, the business was in trouble, and we would go to the personal assets to get our money back. And again, there's little warning here. I'm one that just had the money taken out of the bank account because they had the ability to do it. So we've got to create this separation, this barrier between consumer and commercial actual liability between your assets. And we do that by building a corporate credit profile. when we build a corporate credit profile and we get this credit over here that's not linked to us personally without a personal guarantee, even if I default on all of this credit, which of course I'm not recommending, I'm just saying worst case, like apocalypse scenario, we default on one or all of this credit, they can't come after our personal assets. It's protected. There's a barrier there. So especially in a world of COVID-19, we see anything can happen. This is why it's important that we build this barrier, one of the huge benefits of building business credit. Now, another one is that we're saving our consumer credit utilization. So utilization is the difference between the limits you have on credit cards and the balances that you owe. Here's the biggest mistake I see entrepreneurs make. We start a business. We think it's only going to cost us a fraction of what it really will. We say, I've got credit cards I can use for this. We use the credit cards to fund the business. And then we realize quickly, oh, wow, this is going to take a lot more money than I thought to get off the ground. And it's going to take me a lot longer to get money in the door than I thought it was going to take. Now we put more money on consumer credit cards, which were never designed to support business debts. So we max them out quickly. Then we tank our consumer scores. Then we lost the ability that we could have had to use those consumer credit scores to get all kinds of funding. So we've got a credit program called the Credit Line Hybrid, where if your credit's good, 680 or higher, you can get $150,000, take the cash out, 0% interest rate credit lines, even as a startup. But if you do this and you come in accidentally or wrongfully put business debts on your consumer credit cards, you tank your consumer credit scores, then your ability to get that kind of funding is whoosh, it's gone. So you don't want to make that mistake. Don't start a business using your personal credit cards to do it. If you want to start a business, start the business on paper and start building a business credit profile and score. Business credit doesn't need your actual proof of income. Okay, it doesn't need your revenue. So you could do this even as a startup and start using the credit cards you get to fund the business instead of using your personal credit. Here's why this is such a big factor. When we look at the FICO score, your consumer credit score, there's 5 factors. 35% is how you pay, biggest factor. 30% is your utilization, nearly a third of your entire score. Think about that. 35% is payment history, 30% is utilization. FICO is telling you that utilization is almost equally important mathematically as paying your bills on time. That's how big of a deal utilization is in your world. So you need to leave your consumer credit cards alone. The limits are lower because they're not designed to fund a business. And if you try to use them for that purpose, you will tank your consumer scores because 30% of that overall score is utilization. Then you lose the ability to use that credit for what you really need, which is getting credit lines and loans, which you can do if you let business credit cards fund the business and leave your consumer credit cards alone. And Asia says, good morning from Facebook. Thanks for tuning in. Appreciate it. So be ready in case times get tough. I don't know. COVID-19 kind of thought of that, right? So you've got to prepare for recessions. You got to prepare for economic shifts. It's inevitable. It's going to happen. Okay. It happens there. It will always happen. It is a cyclical. Our economy is cyclical. Okay. It goes up, it goes down. There are recessions. You have to plan for unexpected times. You know, after the 2008 crisis, I now do an economy check, okay, to see if we're going into a recession every single month. After COVID-19, I'm not doing it anymore because what I've realized is the second time around running businesses in 2 recessions, these things come out of left field with no warning often. I've learned that it's not the recession that kills you. It's what causes the recession that typically knocks out your business. So the reality is this stuff comes out of left field. You have to be prepared. And a corporate credit profile takes some time to build. It takes some time to establish. So you don't want to wait until your back is against the wall and you desperately need money to go to try to get it. If you build a corporate credit profile and score, your ability to get loans is better. Your ability to get credit lines is better. Your ability to get high limit revolving credit cards is way better. Okay, it's completely based on your commercial credit profile. So don't wait until you're in trouble to do this. It will take time to build. And by being prepared and doing it before you need it, then you're ready when the economy shifts. Then you're ready when times are tough. Then you're ready when your air conditioning unit goes out, or I can raise my hand. This has happened to me. Your sales all of a sudden, for no explanation, just get cut in half, right? You get sued. All these big fears we have as entrepreneurs aren't as big of fears if you're sitting on 50, 100, $250,000 in revolving credit you can lean on. So you got to be prepared for tough times. Do the work to build the corporate credit profile before, so when you actually need it, you have it readily available. Now, Steve says, back in the consumer credit, when back then, my consumer credit got cut in half too. Even though I've always paid perfect, I had an unsecured $47,000 Bank of America account closed. And even though it was based on a 15-year payback, when they closed it, they demanded to be paid back within 3 years. I paid them off in 4 months. Bank of America sucks. Fist bump, Steve. Feel exactly the same way. B of A is not my friend. I can tell you that much. Okay, and I could go deeper into that story and tell you what it was like having a pregnant wife literally sitting there bawling my eyes out. I remember clearly sitting in my driveway, leaning against the back of my garage. Because my check bounced, they shut off my power, and I literally had to borrow money from my in-laws. It was the worst time in my life because all my credit was gone. All my cash was ripped away. It was nasty. It's why you don't want to do these things and personally guarantee business debts, okay, because that's the kind of stuff that happens. So another benefit here is that, again, you really want to, I don't even know if this is another benefit. You want to get business credit before you need it. As I said, it's really a process. So it's something that you want to make sure that you do before you actually need it. Let's talk about the IRS as well. Look, this is a credibility thing in general. You could be a sole proprietor and not have an EIN, but having an EIN gives you a lot of credit. So you want to build credibility, especially with the IRS, with anybody else that looks at your business to see that you're legitimate. And by building a corporate credit profile, by having an EIN, you just help do that, okay? So it's easy because they're treating you like a real business, not as an individual. And there's a big difference there. You know, sole proprietors get a 1 in 7% chance of audited. Corporations, 1 in 50% chance of getting audited. So again, by being seen as a real entity, a real business, the IRS just doesn't mess with you as much as if they're going to, as if you're a sole proprietor. So another thing is that you're able to build business credit and get trade credit right away. And that's one of the things I love about business credit. You can get cash right away when you understand the process on how to do this. By right away, I mean like today. You can go get credit at trade vendors. So let me give you an example, right? Quill is one of my favorite trade vendors because they sell over 1 million products in their store. And when all of this hit, right, everybody was struggling to get toilet paper and paper towels and all these resources, hand sanitizer, all of that stuff Quill sells. So by building business credit, you have the ability to come in and you have the ability to actually get real usable credit to buy things you really need to grow your business. And you don't have to pay them back like right away. It's not like I'm giving them cash. I can pay this back sometimes over 1, 2, or 3 months. So that way, even starting to build my business credit, so it eases my cash flow. So if I'm starting a business, I need a lot of money for a lot of things. But if I can start immediately getting credit with net 30 terms or net 55 terms, that means I can wait 1 or 2 months to pay back that bill. It gives me more time to focus on getting the business to generate revenue. Or if my business takes a hit and I need to be able to have time before I pay my bills, business credit allows you to do that. So right from inception of starting to build your business credit profile, you can be able to pay what you're actually buying and using for the business over a month, over 2 months' time, even if your personal credit's shot. Personal credit's shot, credit cards you can't use, you're still able to come get vendor credit or trade credit right away. Uline, Quill, Granger, all kinds of places that sell office supplies, shipping supplies, network solutions through strategic network solutions, computers, and networking, and a lot of the stuff you need, and get it on terms. You don't have to pay it back for a month or 2 months. So it eases your cash flow because instead of paying cash, you can use the cash for marketing, for advertising, for payroll to be able to get money in the door even faster. So huge benefit of using trade credit, not just to build business credit. So many people screw this up. Okay, I get this question from Jean Pierre on Facebook all the time. How do I get a $10,000 credit limit at Dell when I'm only using vendors for $100 or $200? You can't, Because if credit issuers see that you're only using $100 to $200 a month, they don't need to give you a $10,000 limit. So when you come in and you actually get real credit you really need to use to grow your business, not only are you building a business credit profile, but you ease your cash flow constraints, putting more cash in your hands and giving you 1 or 2 months to pay back the amount that you borrow, even getting started from day one and building business credit. So it's really an ideal way to start building business credit because it eases cash flow requirements. And now we talked about D&B's Credit Builder yesterday. It's why I don't like D&B's Credit Builder. Why would you pay $1,500 to take accounts you already have and add them to your D&B report? I don't know of anybody that builds business credit just to build business credit. It's not here for our enjoyment and entertainment. We build business credit to get money, dinero, so we could use it to buy stuff we really need to buy to grow our business. So why pay them thousands to be able to come in and add stuff you already have in your credit report when you could pay no money and go get real usable credit to buy stuff you really need on terms and not have to pay it out of pocket, giving you more cash to spend on things you really need, like payroll and marketing. Now, Steve says, I have a sole proprietor since 1995. I need to change to an LLC. Do I keep the same EIN? If you have an EIN, yeah, you can keep the same EIN. Talk to your accountant, depending on the state you're in, Steve. They can tell you how to best do that. Vicky from Facebook, do you recommend using business credit cards for personal use just to ensure the card is not deactivated? I don't. You never want to commingle funds. That could create all kinds of issues for you. So even if you're buying just something small or minor, that's fine, but it takes a lot to get business cards deactivated. So even if you buy something every 3 months, it's just something very cheap, you're better off to do that than use the personal credit cards for any business expenses. And you say, I'm a new business owner and due to COVID, I've had the cards for months, but not ready to use the cards for business as of yet. That's okay. If you're just getting your business started, there's still some basic things you may need to buy. Buy very small things just to keep those cards active. That's better than using those for personal expenses. Danny from YouTube says, what's the best bank account to open up? Well, Steve and I will both tell you it's not Bank of America. We are not fans of B of A. Okay, but I can't really tell you that. I think it's subjective. Personally, I use Regions Bank because they're local to me, and I have great relationships with my bankers there. But I also have had accounts with Wells Fargo. I like Wells Fargo as well. I think Chase is blowing up. Great things about Chase. But look, one of the biggest complained about industries, I think the number one complained about industry with BBB is banks. So I have yet to find a bank that I love. So I think it's subjective. I think you have to figure that out on your own, although I use Regions. And Savad Marketing from YouTube says, initially, if you use your good credit as a personal guarantee to jumpstart your business credit, can you resend or back out? You can't. And this is a great question you ask here. A lot of people say, I personally guaranteed this credit card. How do I get out of the guarantee? You don't. What you do is you do exactly what you said here. You use a good personal credit to get credit cards that report on your business credit reports with a guarantee to jumpstart it and make it happen faster. Then as you start to get credit cards for your business, you just stop using the ones that you personally guaranteed. That's my best advice. And Liddell says, how are you doing? I'm doing good. Thanks for checking in. I appreciate it, Liddell. Okay, so another one is it helps you work better with your bank. Look, banks pull business credit. It's required, okay? So if you try to get a loan from your bank, if you try to get credit card, any kind of money from your bank, they pull what's called a FICO SBSS score. It's FICO Small Business Score. The way that FICO Small Business Score works is this. They look at your business credit scores first and profiles. Then they look at your personal credit profile second. So if you have no business credit established at all, then FICO SBSS will look at your personal scores to determine what it is. But here's the key. In order to get any loan from your bank, you need a 140 FICO Small Business Score. Now, we'll talk about credit scores in a couple of weeks. We'll decode all that for you. Okay, but you cannot, it's impossible mathematically to have a 140 score if you have no business credit established. It's impossible. So what I'm telling you is that you can't get an SBA loan without having established business credit. I'm not talking about PPP loans, right? They didn't base that on personal credit. I'm talking about a normal SBA loan, 30-year loan, 3, 4, 5% interest rate, what we all want. You can't get that stuff without good business credit. Matter of fact, they were even pulling credit to make EIDL decisions when the economic injury disaster loans were out there. Okay, you have to meet credit qualifications with your bank. Your bank absolutely relies on FICO Small Business Score. FICO Small Business Score will never be high enough. It's mathematically impossible to get it high enough if you don't build business credit. So by building business credit, you're coming in and you're really creating a better relationship with your bank. And it's going to be a key to helping you get loans, to helping you get credit lines, to helping you get SBA loans that are low interest and long term. It's key. You cannot get that kind of financing from your bank if you don't have established business credit. It's one of the reasons you must establish your business credit profile and score. Now, the next thing we've got to do is we've got to establish a good payment history. Look, what's nice about commercial credit scores is primarily if you pay your bills on time or early, you get good scores. 100% of your Dun & Bradstreet Dun & Bradstreet and Equifax scores are based on how you pay. 100%. 85% of your experience score is how you pay. So most of your commercial scores are based on how you pay your bills. If you pay your bills on time or early, it gives you good scores. So you need to build the payment history. You need to get credit that reports on your commercial credit reports so you can get good scores and get the best terms on loans and credit lines. Look, lenders and credit issuers pull your commercial credit to determine if you should be approved, how much you should be approved for. Yesterday, we looked at commercial credit reports. You could see clear as day, they say exactly how much money they're recommending to lenders and credit issuers that they give you. So there's a recommendation right from the bureaus of how much money you should be lent, okay, and the rates and terms you'll pay. So if you've ever got a credit card or a loan and you're like, the interest rate sucks, it's your fault. It's based on your business credit profile. If you don't like the interest rate you're getting on the funding you're getting, then you've got to establish your business credit profile and score. It's the key to getting the best rates on rates and terms on loans, on credit cards. It's the key to getting low interest rates and getting longer terms, which keep your payments low. So if you don't like high payments, you don't like high interest rates, you don't like short terms, you have to build your business credit. Even the #1 revenue lending merchant cash advance lender in the country, On Deck, I've got a stack of denials from them because people didn't have enough established business credit to be able to qualify. So I tell this to business owners all the time, especially in my mastermind. These guys have $5, $10, $100 million businesses. And a lot of them come to me in panic because they get denied for funding because their business credit's not established. And what I say to them is the same. Look, you got to build business credit. You got to get credit cards that report to the business credit reporting agencies. Then pay all of your bills on those credit cards. Pay them off before you accrue interest. And that way, everything you're spending on a regular business basis, you're getting a history for. Okay. So let me give you an example. We spend a lot of money on Facebook ads. We spend $1 million a year on like Facebook, Google type of ads, right? A lot of businesses spend money on advertisement, but we use 100% of what we spend on our credit cards and we pay them off every single week. Sometimes twice a week, we pay off the credit cards. But what it does for us is that all of our spending is then showing up on our commercial credit report. So other lenders and credit issuers see that we're spending that money. When we go in to get a loan, they see that we're spending $100,000 to $200,000 a month on our Amex card. They see us doing it. Now, do we have the money to use our bank account for that? We absolutely do. But we put it on credit cards because we want the world to see that we are spending that money. Because now when I try to go get a credit line for $500,000, which is what we're working on right now, our ability to get it is like, it's pretty easy to do. Because when they look at our credit report, they see that we spend $100,000 and $200,000 a month and we actually pay it off. Don't get me wrong. A lot of your six-figure businesses, you're building to six figures, you're building to seven figures, but it doesn't matter. The bottom line is what you're spending every month, you want to be on your credit reports so the world, and by world, I mean suppliers and lenders and credit issuers can see that you're spending that money. And now when they do that, your scores are good because you're paying your bills on time. Now you're going to be able to get the loan. You're going to be able to get the credit line that you want. You're going to be able to get the terms that you want because when they pull that commercial credit report, which they are doing, they see that all that credit's established and it helps you get the best terms on the money that you're looking for. Okay, Jean Pierre says, what type of guarantees can you personally give if you personally have excellent credit but don't own anything? What type of collateral do you recommend I get to benefit from the hybrid program? So let me see. What type of guarantee can you personally give? Well, it's just a personal guarantee is a personal guarantee. So if you're using the credit line hybrid and you say, I have a 680 FICO score, you can get $150,000 in no doc, 0% credit lines for your business. If you default on those, they'll come after you or the guarantor's assets, the same as if you apply any guarantee, but it helps jumpstart your business credit building. And you don't need any collateral for credit line hybrid because that's unsecured. And unsecured by definition means it's not secured by collateral. So Jean-Pierre, great question. So higher credit limits. Per SBA, the credit limits on corporate credit cards are 10 to 100 times higher than what you actually find with consumer credit, okay? And we see this all the time, and I'll actually give you a look on our website here. We actually track a bunch of our approvals, so you can actually get an idea here. If you go to credibility and we look at approvals, you'll get an idea what I'm talking about here. So corporate credit card limits are way higher than what you're ever going to find with consumer credit cards. And there's a reason for that. And the reason is because businesses have an appetite to spend money way more than consumers do. You may never spend 10 grand at Dell on home computers because why would you? But you could easily spend more than 10 grand at Dell on business computers. So the limits in my world, corporate credit world, start at about $500 to $2,500. Vendor credit gets you $500 to $2,500 limits. If you're using that credit, paying it back, when you get to revolving store credit 60 days or so later, you're starting to get limits of about 5 grand and higher. If you're using that credit and pay it back, boom, you jump to 15, 20 grand. The next jump is boom, $40,000. I mean, literally within 6 to 12 months, no exaggeration, you're able to come in and you're able to get very high limit accounts, $30,000, $40,000 individual limits, one credit card with a $45,000 limit. Okay, and you can do that in 6 to 12 months because the limits on these are so much higher than consumer credit. Now here, let me just try to go through and give you an idea. That's an SBA approval. Let me see if I can actually show you some of these approvals. So here we've got a Chase Inc. Or well, this actually shows me some of them. So here's a $100,000 credit line in 5 days, right? Not 5 days from inception, I'm sure. Here we come in as a 1K fuel card with Pilot Flying J. They're just getting started. $3,000 Amazon account. $15,000 credit card here, okay? $40,000 Dell account. Have you ever seen a personal credit card for $40,000? No. Now, I'm just telling you what these are. I can click on these. If you want to look at it more, you can see that the person actually comes in. You can actually see the approval. Actually, this is a $10,000 credit, $40,000 lease. Lowe's 5,000, and all their approvals are right here. So you can actually click on this on our website, see the approvals. It's creditsuite.com/credibility, and you'll see approvals, and you can see all kinds of. I mean, there's probably well over 100, 200 here. Okay, but you see 15,000 Chase, $7,500 Office Depot. Okay, $50,000 credit line with Synovus, a $10,000 Reliable King. Here's a $5,000 JCPenney, $25,000 with Navy Federal Credit Union, $10,000 at Lowe's, $14,000 at Sam's Club. I need you to keep in mind, almost all of these required no personal credit check, no personal guarantee. So the question is, have you ever got a $10,000 credit card from Lowe's? Have you ever got a $40,000 credit card from wherever we looked at here or whatever it was? I don't even know which source it was. This is what happens in corporate credit. $12,000 at Sam's Club. Okay, I see $15,000, $20,000 with Amazon, $15,000 at Murphy's. You'll see a lot of these approvals, 13 at Sam's. A lot of these are $5,000, $10,000, $15,000. So that happens pretty quick in about 90-day time period when you're building business credit. The limits are 10 to 100 times higher than consumer credit per SBA. And this is what we see. You start with $500 to $2,500 limits. When you get to revolving credit, you're at $5,000, $10,000 range. You jump up to $15,000, $20,000 pretty quick. And you're at then the next step, which is $40,000 limit credit cards. And you can get there within 9 to 12 months, especially if you're working with a company like us that actually knows what they're doing to help you along the way. So really high limits. Now, brings me back to my point of why you don't want to use personal credit cards to fund a business. It's also why business credit exists. Consumer credit was never designed to fund businesses. The limits are too small. Corporate credit cards were designed to fund businesses. The limits are really big. Okay, it's the other reason that big companies do this and small companies don't. Credit issuers don't even want you to know that corporate credit exists because they're pretty scared about startups and novice business owners coming in and getting $40,000 credit limit credit cards. But it's absolutely possible if you follow the right steps to build business credit. And it's one of these huge benefits you get at building business credit. Now, another benefit, as I mentioned, is that there's no personal credit check. Multiple benefits here. First of all, if your credit sucks, well, guess what? It doesn't even matter. I don't care if it's 350 credit score. I don't care if you're in competition to get the lowest FICO score that's possible. You still can build corporate credit because we're having the business fund itself. We're not even looking at our personal credit scores. But it also matters because 10% of your consumer credit score is based on inquiries, how much new credit you're getting. So we don't want to put inquiries on our consumer credit report at all unless we have to. And here's why. Credit lines like our credit line hybrid, where you can get $150,000 at 0%, right? That's based on inquiries. Even one inquiry can cost you $25,000 in funding, okay? It's a nightmare. It's a mess. So you got to limit inquiries on your personal credit card or report, and you don't want to get business credit cards while you're giving away inquiries. I don't want an inquiry on it for a Home Depot account or an Amazon account or a Walmart account that I'm using for my business. Why would I want a personal inquiry on my credit report when I'm using it to fund my business? That makes no sense. When you build business credit, it doesn't affect your personal credit. Okay, there's no reporting of this credit on your business credit report. So your utilization is safe, okay? Because we're getting accounts that report to the business credit reporting agencies, not the consumer. We're not letting them put inquiries on our credit report. We're making them make the decision based on our established business credit profile and score, okay? And again, we don't have that utilization as well. So a lot of benefits here by making sure that our personal credit's not adversely affected by building business credit. Now, again, we talked about some of the many benefits, but again, there's so much more than we've even talked about here. This is a way for your business to fund itself without you personally being needed for it to actually qualify. Okay, you're able, as I mentioned, to come in and get high limit accounts, but you're able to do it very quickly. If you build business credit the right way, you can get to the end of the process in 6 to 9 months. Our clients get to Visa card, Mastercard, auto financing with no guarantee and credit check in 6 to 9 months, regardless of personal credit, regardless of cash flow, regardless of collateral. Another huge benefit here is that it makes you more lendable. Okay, it makes you more lendable. It makes it easier to get loans and credit lines. Another benefit is that it improves your overall fundability. Fundability is what all lenders look at to determine if you should be approved for financing. This improves your overall fundability as well. So a lot of other benefits besides no personal guarantee, besides no personal credit check, it's also your reputation. Remember, commercial credit is publicly available. Your clients, your competitors, your prospects, potential investors in your company, all of them can see your corporate credit profile and score. And I mentioned this before, I coach an entire group, a massive group of people, of entrepreneurs where all they do is buy existing businesses. It's all they do. And here's what happens. They're going in behind the scenes and researching the businesses they want to buy. They're not looking for businesses for sale. That's for chumps. They're actually coming in behind the scenes, finding businesses that fit the mold of what they're looking to buy. Then I teach them to pull the corporate credit profile on that business. I even teach them how to pull these profiles in bulk and do it very cheap. And then what they're doing is they're looking to see if these businesses have established credit profiles and scores. They're looking to see if these businesses have higher limit accounts. And if they do, it's a huge check mark that gets them to want to approach the business owner to buy your business. This is happening behind the scenes and you don't even know it. There are literally tens of thousands of entrepreneurs that are out there right now doing all kinds of research, probably on companies like yours with an interest in buying your business. And they're looking at your corporate credit profile to make that decision. Do you know how many other decisions are made by anybody that wants to being able to look at your corporate credit profile and score? Your competitors, your prospects, your clients. Before we do business with companies, we pull their corporate credit profile. Why wouldn't we? It's easily accessible. We want to know who we're doing business with. And if we're getting into a business that's not paying their bills, it's not a business we want to deal with. Okay, it's not the kind of company that we want to work with. If you've ever watched the show The Profit, Marcus Lemonis did this once. I'll never forget the episode. The guy said a bunch of stuff that didn't make sense. So he went back to his hotel that night and he pulled the corporate credit profile for the business. He came in the next day and confronted the business owner about the discrepancies on the corporate credit profile and walked away from the entire deal. all because of what was on the business credit profile and score. So this is your reputation being publicly available. It's something you need to control because anybody that wants to can see this, okay? Now, and CZ says, hi from New York. Hey, thanks for tuning in from YouTube. So business credit building doesn't happen automatically. You have to actively work on this because 97% of trade vendors do not report, okay? So you'll also, again, need to improve that fundability. And that's the first step of building business credit. Make sure you have a business phone number. Make sure you have a business address. Have an EIN set up. Have an entity set up. Have a professional website set up. A professional email address. Get your phone number listed with 411. Get a toll-free business phone number. Make sure all your listings are congruent online. One of the biggest mistakes I see, as crazy as it is, the application that people, the name people put on their application doesn't match exactly with Secretary of State. I don't even begin to understand why. Actually, I do. We set up our Secretary of State records and we don't even think about it again. Then we make a change to our business and we don't think about going back and changing that information. What you don't know is that lenders and credit insurers pull that Secretary of State record because they want to see if the application's fraudulent or not. So they're looking online to make sure that all this information is congruent. There's over 125 factors that tie into your fundability. If you want a free fundability assessment just to see how fundable your business is, just give us a ring, 877-600-2487. Our number's right here on the bottom of the slide. We'll do a free fundability check to see how fundable your business is. We'll check places like the Secretary of State to see how well established your business is. And don't tell a bunch of people this. But we also are testing right now a fundability report. We actually integrate with LexisNexis where all the lenders get this information, and we can actually pull a report to show you all of the discrepancies between what you put on an application and what's actually being seen by lenders from the reports they use behind the scenes, okay? That's capability we have. It's like a three or 5 page report that gives you that. All of that happens on a call. So if you want to learn more about establishing your initial fundability, give us a ring and we'll talk with you more about that. Now, Donald says, do you help correct the DUNS information? We absolutely do. We help fix business credit profiles and scores. You can also go direct to Dun & Bradstreet to do that. They used to have a service called iUpdate, but as I just learned yesterday, they actually, and I don't know why our team knew this months before, they have changed that to a new system, but we can help you with that. If you need help fixing your business credit, give us a ring. And Fresh Air Brown says, how important is the website to your business? Extremely important when it comes to getting credit and financing. Almost all applications are going to ask for a website. They're going to want to see you have a professional website that reflects what your business does. Don't worry, man. It's super cheap to get one. You can go to upwork.com or Fiverr, Fiverr, get somebody to put it up for you, and then go to a place like monstertemplate.com or these places that sell pretty good looking website templates for less than $100, $150, $200 total. You can have a professional website set up, okay? So again, we talked a lot about this, getting a business address set up. You know, you don't want to use a home address. Google or Dun & Bradstreet is now using Google Earth views of your business on your commercial credit report. So if you don't want a picture of your house on your commercial credit report, get a business address, get a virtual address. There's 3 sources you can get virtual addresses from. Alliance is my favorite. You also have DaVinci and Regis. Don't use PO boxes. Don't use UPS addresses. Set up a business bank account. You don't need it to be able to build business credit, but they're going to ask for a business bank reference, which you won't have unless you take this step. So you really need to make sure that you do have a business bank account set up because a lot of vendors will ask you for business bank references. You need to get set up with the IRS. I've already talked about getting set up as an LLC or a corporation. Don't be a sole proprietor. As it mentions here, 1 in 7% chance of getting audited as a sole proprietorship. Steve, be aware of that. I know you said you're a sole prop, and a 1 in 50% chance of getting audited as a corporation. Just choose a good entity that can protect you and makes you less liable. If you choose an entity like a sole proprietorship where you're liable anyways, then getting credit with no liability doesn't matter because you are the business. So to separate your liability truly, you've got to get the right entity, like a corporation, S Corp or C Corp. Consider an LLC, even a partnership, but stay away from sole props. So working with D&B, you've got to get your DUNS number with Dun & Bradstreet. Go to creditsuite.com/reports. After you set up that fundability, if you go here, you're able to just do a free check with D&B and Experian to see if you're set up now. And that'll take you to the special link you need to go to get your DUNS number. Your DUNS number is 100% free. D&B is probably going to try to email and call you to try to sell you something you don't need called Credit Builder. You don't need that. If you don't want to be sold, don't get them on the phone. Okay. Otherwise, your DUNS number is 100% free. You never need to buy anything from them to get it. Next, as we talked about, start building vendor credit. Get credit with places like Uline, Quill, Granger, etc. Okay, that's the first step. Or if you have good credit, consider the credit line hybrid. With credit line hybrid, you're able to use good credit to get approved for up to $150,000 in no-doc credit lines and use that to build your business credit. Our numbers on the bottom of these slides. Give us a ring. We could talk to you more about that as well. You've got to set up credit monitoring. You don't need this if there's no credit reporting now. So first, do a check at creditsuite.com/reports. If anything comes up, get credit monitoring and see what's on your credit reports. We've made it very, very affordable. It's $24 to monitor D&B, Experian, and Equifax with us through NAV. They even let us underprice let us underprice them, even though we're using their platform to be able to do this. So go to creditsuite.com/monitoring. It's the cheapest monitoring you're going to get. It's $250 from the bureaus, and you're getting pretty much the same thing for only $24 at creditsuite.com/monitoring. I don't care where you go. You can go to Equifax, D&B, and Experian Direct. Just expect that you're going to pay a significant premium. It's 90% cheaper if you go to creditsuite.com/monitoring. You need to update your credit report. You can go to iupdate.dnb.com. It will redirect to their new service that's called the DNB dashboard to actually update this. Equifax and Experian, take a quick screenshot of this. Here's links to actually update information with them. Sometimes Experian and Equifax gives you a hard time to update or fix your credit reports unless you're actually using their credit monitoring. So something to keep in mind. After we've built a handful of accounts, then we move on to what's called the retail credit tier. This is where we get credit with almost all major retailers: Dell, Sam's Club, Costco, everybody, all these retail stores from Macy and Nordstrom. Takes about 5 accounts to get approved with these without a personal guarantee and credit check. They're probably going to ask for your social. They won't ask for it with vendors. They'll ask for it with retail credit because it's underwritten by banks. And banks are required by the IRS or by the government to get your social to verify your identity. But you have to make sure that you're not giving them the ability to pull your personal credit. So if it doesn't clearly state that on the online application, fax or call and put your application in that way. Tell them you don't authorize a guarantee or credit check. That will push them to pull your business credit profile and score for the decision. It helps your business fund itself, which is our goal here. Fleet credit takes about 8 accounts to get to this step. Sunoco, Conoco, Exxon, Marathon. These are fuel stations. It's where you get fuel. It's where you repair vehicles. It's where you maintain vehicles. Doesn't apply to a lot of us. Does apply for anybody in the transportation industry. This is your saving grace in the transportation industry. You're getting $30,000, $40,000, $50,000 limits. I see $50,000 weekly limits issued through Pilot Flying J. So you could easily fuel an entire fleet of vehicles with that much money. And then we get to Visa, Mastercard. These are elusive. They're very rare. They're very hard to find. Okay, so if you're working with Credit Suite, we've got a lot of these available. Outside of that, they're tough to find because they kind of come and go. So Sam's Club is one. They have a great MasterCard. Sometimes it's available, sometimes it's not. But this is where you get Visa card, MasterCard without a personal guarantee, without a credit check. You'll need 14 accounts on your credit report to get these. And one of those will need a $10,000 high limit to get to the final tier here. And in this tier, you can also get auto financing without a personal guarantee or credit check. One of our clients, Christine, got a $185,000 loan at Ford without a personal guarantee or credit check. Pretty crazy. You might say, like, who buys a $185,000 vehicle? It was a big truck. It was beautiful, man. I don't know what kind of truck it was, but it was like a big rig, yellow, decked out thing. It was awesome. $185,000. So you can get all that without a personal guarantee, without a personal credit check. Okay, and Ronald says, do you help with companies that have USA and international locations? We absolutely do. Fresh Air Brown says, can I pay for y'all to do the build for me? We do help you with building business credit. If you want to learn more, give us a ring, 877-600-2487. We also do a free consultation with you. So we'll do a fundability check. We'll do a business credit check for you for free. We'll help you get your credit reports for free with Dun & Bradstreet, Equifax, and Experian, and we'll tell you all the funding you can qualify for. That's what happens on a consult call for us. Our number is 877-600-2487. It'll be on future slides, so we can help you with that as well. Goldie from YouTube says, Google is not posting virtual account addresses. Will this hurt you getting business credit? It will not hurt you. Google doesn't really like a lot of virtual addresses. Neither does DMB, but they're way better than using P.O. Box or UPS addresses as well when you're actually trying to build business credit. So recap, A lot of benefits. Keep your utilization low. No inquiries on your personal credit report, right? It's fast and easy to establish business credit. You can get approved even if you don't have collateral, even if you don't have cash flow, even if you don't have good credit. Business credit is one of the only kind of funding you can get without cash flow, credit, or collateral. Almost all money, loans and credit lines, is based on one of those three things. I call it the 3C cash acquisition formula: cash flow, credit, or collateral. One of those is needed to get almost all kinds of business financing, but you don't need any of those to be able to get business credit. So huge benefit. Payment history and credit really matter. So it helps you build a positive credit history to be able to make it easier to get loans and credit lines. Okay. It also establishes your fundability and makes you more credible. It helps you fund your business by using vendor credit, store credit, fleet credit. You're able to get approved without a guarantee. You're able to get approved without a credit check. It's just a ton of benefits, not to mention that the limits on these accounts are $10,000, $20,000, $30,000, $40,000, way higher than what you'd ever find on the consumer side. And again, you're able to get approved without a credit check, guarantee, without revenue verification, without collateral. I mean, it's perfect for COVID-19, right? Because a lot of businesses are struggling right now, and you could still get everything that I've shown you today. And Ronald says, going to sign up tonight. Awesome, man. I look forward to working with you, Ronald, from YouTube. So here's our number, 877-600-2487. You can go and give us a call on our consultation with us. We're going to do a free check to see if you're set up with the reporting agencies now and you don't know you are. Experian or Equifax and Experian will both give you failing scores even if you have no credit. We're going to check that for you. We're going to do a fundability check by looking at things like the Secretary of State. Like I said, we even have the ability to do a fundability report to check the reports that lenders are using against your application to tell you when you're going to run into problems. We'll help you get your Dun & Bradstreet, Experian, and Equifax credit reports for free as well. Even NAB doesn't do that. We're the only company out there that offers free business credit reports. And by the way, it ain't free to us. Every credit report we give you for free, we still pay for that credit report, but it's just that important to me. I want to make sure that you have ability to really, really affordable credit reports so you can monitor them regularly. It's why we offer them cheaper than you'll find anywhere in the world, $24. And it's why we help you get them for free on a consultation. Feel free to give us a call. If you like this, do me a favor. Give me a like. Give me a love. I see that in real time on my screen. So do me a favor. Help me out. Like, I don't ask for much. I just ask for, give me a like, give me a love, give me a share. That helps the social channels see that the content's valuable, and it helps other people then get a chance to see this. And I'm really passionate about helping entrepreneurs. So it helps me fulfill my cause, which is to bring this information to as many people as I can to help you all get funding for your business. If you like this, we go live Tuesday and Thursday at 1. We go live Wednesday at 11, all Eastern time. You can access our social channels. We go live on Periscope, Facebook, and YouTube. You can access our social channels at creditsuite.com, top right of the page. We have daily tips on Instagram, Twitter. We also have a podcast, 350,000 downloads, very popular, with all kinds of really smart industry experts that come in and teach you all kinds of cool things that help you grow your business. So you can access our podcast on iTunes, iHeartRadio, radio.com. You could just go to creditsuite.com, top right of our page, and access that as well. Steve says, good stuff as always. Thanks, Steve. And let me know if you need any help on the changing of your if you need any help with changing from a sole prop to another entity, let us know. And Ronald says, any veteran discounts? We love veterans, so mention that you're a veteran when you give us a call, and our team will talk to you more about that. Luxury Mobile Hospitality Group. That's smart, using that as your YouTube name, because now I promote your business whenever I say you. Can we partner with your company to offer service to our clients? Yes, we have a partner program. We're the only company in the country that actually has a turnkey partner program that helps you offer business credit financing. You use our same technology, our business finance suite. You can sell it in your name. We have a wholesale where you pay a wholesale cost, and then typically our partners make $2,000 on average per sale they make. So if you're interested in offering business credit and financing as a service, we do all that. Everything you need to do that, the training you need, the back office to manage commissions, manage customers, to add new clients, all the materials you need to market, marketing flyers, press releases, free reports, ebooks, email content, social media content, PowerPoints, videos. All of it's available for our partners. As a matter of fact, our executive partners get these PowerPoints that you see right here before I do. Our partners actually get my PowerPoints 2 to 3 weeks before I even get them. So every PowerPoint I've ever done is all available for our partners as well. through our executive program. So yeah, we give you everything you need to actually successfully offer business credit financing. If you'd like to learn more, give us a ring, 877-600-2487. I'll be back tomorrow at 1 o'clock Eastern. Tomorrow, we're talking about shady stuff. We're talking about shelf corporations. We're talking about buying business trade lines. We're talking about CPN numbers. We're talking about all the shortcuts people try to make to the business credit building process. And I'm going to show you what happens, how the trouble you get into when you do this. It's not from me. I'm going to give you quotes from Equifax, from Dun & Bradstreet. I'm going to give you quotes from the FBI and quotes from the Federal Trade Commission. Okay, I'm going to give you quotes from the government, all different types of entities, so you could really see, even from FICO, how the stuff is perceived when you take these shortcuts and the trouble it can get you into. We'll be doing that Thursday at 1 o'clock Eastern. You can access that on Facebook, YouTube, and Periscope. I'll see you then. If you have any other questions, then give us a ring, 877-600-2487. Andre, welcome back. We're just wrapping up, but you can watch us in its entirety on your channel of choice, including YouTube, where you're tuning in from. Thanks, everybody. Have a great day. See you tomorrow at 1 o'clock Eastern.